This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
3, 2, 1. Good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Friday, January the 19th, 2024. We're so glad you could join us. Coming up a little later in the program, we'll run down some of the ag industry highlights, including some information from the USDA in Iowa, also from the National Corn Growers, and much more. But first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Well, we're at the end of another trading day and the end of the week, and it's time to talk with Curt Kimmel of agmarket.net. And Curt, what did we see in those grain markets today?
Well, we saw some stability. Usually Fridays are down and out, but we stabilized this week after the fallout from last Friday's monthly supply-demand report, quarterly grain stocks report. Also combined with concerns out of China about future demand there and negative population growth, and even talking about new GMO seeds being used and so forth. I thought the market kind of made a stand. The neat thing about today was we didn't close, near the day's highs, but we were at least stable because yesterday we had a price reversal to the upside. Particularly corn and beans made a new low, closed higher yesterday, and we were able at least to hang on to those gains. So hopefully we have some bottoming action in through here. The trend is still down. Commodity funds still remain huge shorts. They're short about 66,000 contracts of Chicago wheat, 243,000 contracts of corn, about 47,000 contracts of beans, 49,000 contracts of bean oil. They're long about 47,000 contracts of soybean meal. They're not all short. They do have a little bit of a long in the bean sector. This morning, saw the weekly export sales report. It came in much stronger than expected, better than expected. As of last Thursday there, we sold 49 million bushels of corn, 29 million bushels of soybeans, and 26 million bushels of wheat. Those were strong, but they were due to pick up because, as you remember, we had 2 weeks there of Christmas and New Year's, and with the world kind of on holidays, kind of hard to see a whole lot of enthusiasm. So it's nice to see those perk up. Corn sales on the weekly scale are very aggressive. They're good. Bean sales are kind of slipping in through here, but we saw a sales announcement this morning. Sold 297,000 tons of beans to China. So they came back in and picked up some. And that's a good thing to see from the standpoint they haven't bought anything since December 19th, and have them back in the market with the South American crop coming online here might signal that, early yields might be a little disappointing, might be a little slow getting those beans out of the Southern Hemisphere. So we'll take it. Brazil, basically still looking at being downgraded, but Argentina has been upgraded. And what I mean by that, the Brazilian U.S. yield, as you know, 157, but a lot of analysts are down in that 150 million metric ton area. Argentina is 55 million metric tons, or 50 million metric tons. And last year they were 25 million metric tons. They doubled their production, but that just shows they had a significant weather concern last year. Last year at this time, their soybean crop was only 4% good to excellent. Now it's 55% good to excellent. So Argentina and Paraguay is expected to make up the deficit that Brazil is going through right now. Technically, like I mentioned, the trend's still down, but we're able to hold in there and keep Thursday's reversals intact. On the weekly chart, corn closed down 1.5 cents on the March contract. Soybeans were at 11 cents lower on the week, and the wheat market was down, Chicago down about 2.75 on the week. So it's kind of impressive with everybody being kind of negative. One, though, as we move forward here on the next topic, these lower prices are going to put producers, livestock producers, in a situation they can buy some feed needs fairly cheap, Dustin.
And that's where I was going to go next. How are the livestock markets shaping up? I know cattle had a somewhat decent day yesterday. Did that continue, and how are hogs doing?
Yeah, the cattle kind of broke out from, we had an upward little channel going in through there. We went above it here. Cattle finished $3 higher for the week. Man, I'm from the old age here with this weather we've seen in here. I thought the market would have acted a little bit more positive to the upside with the current conditions we're seeing clear across the Midwest. But needless to say, market's going to do what it wants to do. This afternoon, cattle and feed report on feed numbers expected to be about 102. Placements, 95%. Marketing is 99. And so that'd be out here Friday afternoon, 2 o'clock. We'll see what those numbers are, and more importantly, see how the trade reacts to that. Hog-wise, hogs kind of stalled out to the upper end of their channel, kind of backed up for the week. Hogs were down about $1.15, $1.20. Not too bad, but it's probably going to see buying cattle, selling hogs on the spread here short time. Product-wise, the loin market, wholesale 86 cents, ham 77 cents, and the bellies have been gaining ground in here, wholesale $1.27. It wasn't that long ago they were down there in that 80-cent area. So if you're a bacon person, you might want to put a little in the freezer here, Dustin.
All right. Well, of course, Curt, a lot of great information. If folks want to get in touch with agmarket.net to get some more ideas on what they should be doing with their marketing plans, how do they do that?
The best thing to do is go to agmarket.net, click on Intel. That takes you to where all of our analysts put their research information. Partners do a good job coming up with some trading and hedging strategies. Plus, we got a seminar coming up here in February, so check that out. Or else you can call us here in Normal, Illinois at 1-800-779-1515.
All right, Curt, thanks for the insight. We'll talk to you again next week.
You bet. Take care.
That again was Curt Kimmel of agmarket.net. Let's go ahead and take a look at the Iowa Agribusiness Radio Network market screen and see where the market's closed.
March corn was up 1.5 at 445.5. March soybeans down 1/4 at 12.13 1/4. Soy meal down $4.80 at 356.50. Soy oil down 72 cents at 46.90. Chicago wheat up 7 3/4 at 593 1/4. Kansas wheat up 2 3/4 at 608 even. Minneapolis wheat up 8 cents at 696 rather, and oats up 13 cents at 379 3/4. Live cattle for February down 45 cents at 174.37. Feeders down 60 cents at 231.95. Lean hogs down 35 cents at 70.75. Pork cutouts down 27 cents at 85.40. Class 3 milk up a dime at 15.75.
And that's been a check of the market recap. We're going to take a short break here from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll run down some of the ag news headlines. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Let's run down some of the headlines here in the ag industry. Congress voted yesterday to avert a potential partial government shutdown through the passage of a stopgap government funding bill. The continuing resolution extends the current funding levels while maintaining the laddered CR approach, setting new deadlines of March 1st for the funding that was set to expire tomorrow, and February 2nd's funding will be extended to March the 8th. The final vote was bipartisan in both the Senate and the House. This is the third stopgap funding bill Congress has passed since the 2024 fiscal year began on October the 1st. Looking ahead, Congress must now work to draft and agree to 12 individual appropriations bills before the March deadlines, which many in the conservative faction of the House Republican caucus oppose, and the current $1.7 trillion funding framework that was negotiated between House Speaker Mike Johnson and Senate Majority Leader Chuck Schumer. So there's no clear path forward to passing these funding bills before the new deadline. In addition to government funding negotiations, the House and Senate remain embroiled in tense discussions regarding a comprehensive border security and foreign assistance packages. These issues will likely be the focus of the Congress for the next few weeks. USDA Department of Rural Development State Director Teresa Greenfield today announced that the agency is investing over $1.2 million in 13 grants and $43.9 million in 5 loans to projects in Iowa that promote rural small businesses, provide technical assistance, and support public works infrastructure. Greenfield says the past week many Iowans have experienced intense snowstorms and bitter cold, and reminds us how critical it is to have response vehicles, sirens, emergency radios, and road maintenance taken care of, and having the proper equipment to deal with severe weather events, especially in rural neighborhoods. These investments are the one way President Biden's Invest in America is helping to build, grow rural communities, according to Greenfield. And finally, the National Corn Growers Association said yesterday that it's deeply disappointed in a decision released by the International Trade Commission, which upholds an earlier opinion that found material injury to the U.S. fertilizer companies during a time of rising on-farm fertilizer prices that went on to reach record highs. The decision comes after the U.S. Court of International Trade asked the U.S. Department of Commerce and the ITC to reconsider earlier decisions that they had issued on the matter. The International Trade Commission opinion upholds a previous decision by the agency that trade practices of a Moroccan-based company caused harm to U.S. fertilizer companies. And that decision comes almost a week after the U.S. Department of Commerce announced it was lowering duties on products from these Moroccan companies from 19.97% to 7.41%, and now introduces uncertainty to whether or not the tariffs that could be used as an argument to keep these tariffs as a high fertilizer in place. The U.S. Court of International Trade will now review the remand decisions and issue a final ruling. The Department of Commerce is also set to make another decision regarding its administrative review later on in this year. And that's been some of the ag news headlines here that we've been following at Iowa Ag Radio. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, X, LinkedIn, and our YouTube channel. While you're there, don't forget to subscribe and hit the bell icon so you're notified each time we put out a new video project. Also, don't forget about our free market podcast through Amazon, Apple, Spotify, Google, and Podbean. From the iARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson, Riley Smith, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.